So to really get what's going on, you have to start with this question. Right now, there is a staggering $7.6 trillion just sitting on the sidelines in money market funds. That's an all-time record. And the core argument we're looking at today is that where this mountain of cash decides to go next, well, that could define the entire market. Here's the game plan for how we'll unpack this. First, we'll look at the two big engines the whole thesis is built on, AI and the Fed. Then we'll get into the stocks themselves, which fall into three interesting groups: the AI titans, some rebound opportunities, and a few really specialized growth plays. And finally, we'll wrap it all up with the core idea.
All right, let's dig into the foundation of this whole argument. The analysis says there are basically two incredibly powerful engines just revving up, ready to push the market forward. The first engine, well, that's the AI revolution. And the source doesn't just see it as another tech trend, they call it a wealth consolidation event. The key idea here is that most of the money made from AI won't be spread out thinly. Instead, it's going to be funneled almost directly to the shareholders of just a handful of really dominant companies.
And engine number two, it's all about the Fed. This analysis hinges on this one critical question, because historically, this exact scenario has pointed to a pattern that has some pretty powerful implications for where we are right now.
And that historical pattern? It leads to this one very specific number, which the source says is a hugely important piece of the puzzle, 13.9%. So what in the world does this number mean?
That 13.9%, that's the average return of the S&P 500 in the 1 year after the Fed starts cutting interest rates when the market is already near a high. This is based on data going all the way back to the 1980s. But here's the real kicker. According to this research, every single time this has happened, the market has been positive a year later, 100% of the time.
And this is where those two engines really hook up. The theory is pretty simple. As the Fed cuts rates, that record-breaking $7.6 trillion in cash starts to earn less and less. That puts a ton of pressure on investors to move it somewhere it can work harder, somewhere with higher potential returns. And you guessed it, historically, a whole lot of that money flows right into the stock market.
So that's the big picture. But how does this all translate into specific stocks? Well, let's start with the first category, the AI titans. We're going to focus on the one company that's really positioned as the absolute powerhouse of this whole revolution. Yeah, when it comes to NVIDIA, this analysis really doesn't pull any punches. This quote pretty much sums up the high-conviction argument that even after its incredible run, the idea that the company is done growing is, well, you see what they think.
You know, what's really interesting here is the valuation argument they make. If you look at its forward PE ratio, which is basically just its stock price compared to its expected earnings in the future, NVIDIA is actually trading cheaper than companies with much slower growth like Costco and Walmart. The point they're making is, yeah, the stock price is high, but they argue you're actually getting a whole lot of future growth for your money.
Okay, next up, let's talk about the rebound plays. According to the source, these are companies that have been seriously beaten down, but are now showing real signs of a major turnaround. Before we get to the first company, we've got to talk about this one term, a short squeeze. It's this explosive thing that can happen when a stock that almost everyone was betting against suddenly turns around. It forces all those negative bettors, the short sellers, to rush in and buy back shares. And that panic buying can send the stock price absolutely rocketing upward.
And that brings us right to Opendoor. Now listen, the thesis here is not a buy and hold forever kind of thing. It's laid out as a tactical short squeeze setup. The argument is simple. Way too many traders bet against it, and now, with its business model looking better as interest rates fall, those short sellers might get trapped and be forced to buy, which could drive the price up fast.
The next comeback story is a big one, Alibaba, and its journey has been, well, it's been a real roller coaster. This timeline shows it all, from its absolute peak, through a brutal regulatory crackdown that crushed the stock, to a bottom where the news was just relentlessly negative, what the source calls a deep, dysphoric news cycle. So what's the catalyst for the turnaround? The return of founder Jack Ma, who is now pushing the company hard into AI.
So if you dig a little deeper, the source points to 4 key things that could drive Alibaba's comeback. First, its cloud business is picking up speed again. Second, consumer spending in China is starting to improve. Third, the company is buying back its own stock like crazy. And fourth, even with the recent recovery, it still trades at a huge discount compared to its global peers. All right, let's move on to our final category. These are the specialized growth plays. We've got 4 smaller, more focused companies here, and each one is taking a really different angle on these big AI and crypto trends.
First one is Bitmine Immersion, and their strategy? It's about as straightforward and aggressive as it gets. Raise a bunch of money, use that money to buy Ethereum. Their stated goal is to eventually own a massive 5% of the total supply. So this company is basically a direct, supercharged bet on the price of Ethereum.
Next up, we've got Apply Digital, and the source has this great nickname for them, the AI landlord. See, they cleverly pivoted from crypto mining to building the data centers that AI companies desperately need. The keys here are the long-term leases that create steady, recurring revenue, and this huge vote of confidence from NVIDIA, who isn't just a major customer, they're also a direct shareholder in the company.
And third, a name you definitely know, Intel. The whole idea here is that its big turnaround plan is getting a massive boost that lowers the risk. Why? Because the US government has basically declared the domestic chip supply chain a matter of national security. When you combine that government support with a new partnership with, of all companies, NVIDIA, plus some aggressive restructuring, well, you get the core of this turnaround thesis.
And finally, we have Big Bear AI. The case for this one is built on a really strong financial position, meaning a fire hose of government spending. Their whole focus is on using AI for defense and homeland security, which means they benefit directly from new funding bills. And now, they're starting to expand beyond just US government contracts.
So, okay, we've just run through all 7 companies. Let's take a step back and tie this all together with the one big idea that connects every single one of these picks.
Basically, the argument is that we're seeing these two massive forces slam together at the perfect time. You have the technological disruption of the AI revolution creating a new class of winners, and at the exact same moment, you have a monetary catalyst from the Fed that's getting ready to push trillions of dollars of cash off the sidelines. That combination is the powerful setup being presented for these 7 stocks.
And all of this really boils down to the one central question that's hanging over not just this analysis, but, the entire market right now. Are we in the early days of a genuine AI-fueled economic boom, or are we just watching the making of another massive bubble? That right there is the multi-trillion-dollar question.